Hi there, this is Rob, and this is the overnight overview for Friday. It was a boring afternoon on Thursday, but the employment report always provides some excitement, so let's review. The one study that was somewhat compelling yesterday was the one I showed in Thursday's overnight overview. It looked at other times during long-term uptrends that the market has gapped up for exactly 4 days in a row. The findings showed that odds favored somewhat a gap down on the 5th day. As I always do, I checked the odds sheet to see whether they provided confirming evidence. Unfortunately, for the second day in a row, the odds sheet showed no edge in either direction for any of the 8 index securities that we track. All of the average percent profitables fell around 50%, and the profit factors were all close to 1, meaning no edge. A large consideration I discussed in the trading room yesterday was the fact that the employment number was due this morning, so we had a known market-moving event that was due to occur during the overnight session. This won't deter me from making trades if odds are strongly in my favor, but it does add an extra risk component, and therefore I am less inclined to take marginal trading signals. Of course, what we were looking at on Thursday wasn't even marginal. The 52% up gap rate and the profit factor of 1.08, were both very close to the average overnight for the last 10 years. The whole point of evaluating historical data is to help you put odds in your favor. Playing odds that are the same as you would get from any random night doesn't put you at an advantage. So in case it's not clear, I again sat this one out. Let's take a look at how the overnight unfolded. Action was quiet leading up to the big report at 8:30 a.m., then pow, everyone loved it. What's notable here is how fast the spike occurred. Traders need to consider this when assessing their risk. Even with stops in place, spikes can occur so quickly on news events like this that they will experience slippage. Trading overnight, with or without stops, does not mean taking undue risks. I looked at many different studies and odds before taking a position. I prefer to see a confluence of indicators all suggesting a favorable risk-reward scenario. If risk is too high or indications are mixed, then there's nothing wrong with not taking a position. This holds true for all styles of trading, not just overnight trades. No research on Fridays, instead we have a joke. How do you make a Kleenex dance? You put a little boogie in it.